Hi everyone, so today I'm going to explain to you the impairment rules under IAS 36. At the end of each year end, a business is required to assess if there's any indication that an asset may be impaired, and what it means by impaired is a loss in value. There are several indications for this. One of them is the fall in market value more than expected, which is an external factor. An example can be recession, hence the market value of properties may be lower than expected, and therefore in accounting terms we call it that the buildings have been impaired. Second indication, an external one as well, is a significant change in the technological market, legal or economic environment. It can be, for example, there's a metro express project that a certain town is going to be affected, and therefore the houses near the metro might have less value now because of the noise and pollution. Therefore, the prices of these houses might be impaired as well. A third indication is an internal one, is the evidence of obsolescence or physical change. It can be, for example, you have a business and you want to relocate to a more frequented area, so the driver on its way might have made an accident by carrying your fixtures and fittings, and it comes out that the goods were dented but are still functional. Therefore, we call it that the fixtures and fittings have been impaired. If we look at the rules for impairment, impairment is needed if the carrying amount is greater than the recoverable amount. The carrying amount is the amount of the asset in your statement of financial position, which is the cost minus any accumulated depreciation made throughout the years from the date of purchase till now. Recoverable amount is the value that an asset is expected to generate for a business, and it is measured as the higher of a fair value less cost of disposal and the value in use. Fair value less cost of disposal looks a bit complex as a word, but what it means is the value you can get by selling the asset minus any selling costs. As for the value in use, it is the present value of what you can get from selling the asset in the future. Present value measures how much a future sum of money is worth today. You have an impairment loss if the carrying amount is greater than the recoverable amount. This is because accountants like to adopt the prudence concept where they don't want to overstate their assets. And the impairment loss is the difference between the carrying amount and the recoverable amount. The double entries for this is debit impairment expense in your profit and loss account, and you credit your non-current assets in your statement of financial position. I have compiled a question for you to make it clearer and not too theoretical. A business purchased office premises on the 1st of October 2010 for $117,000 and uses the reducing balance method of 20% per annum. On the 30th of September 2012, an impairment review was carried out and it showed that the premises had a fair value less disposal cost of $60,000 and a value in use of $62,500. Calculate the impairment charge and the value of the premises in the SFP. The first step is to calculate the carrying value at the impairment date, that is the 30th September 2012. We know the machinery was bought on the 1st of October 2010 and therefore 2 years has passed. One of the ways you can calculate the carrying value in the second year is by taking the cost and deducting 20% of the cost. Then you get the carrying value for year 1. You can see it on the left hand side, and you calculate 20% on the carrying value in year 1 and you get your depreciation for year 2. And when you minus it with your carrying value, you get the final carrying value in year 2, which is $74,880. However, for exams, we always need to work smart. Always use the quickest way to make the examiner know we can work fast too. And therefore, I always suggest my students to use that formula on the right hand side. If the percentage is 20%, 100 minus 20 is 80%, and we want the carrying value for 2 years, after 2 years, and therefore you do 0.8 times 0.8 times the cost, and you get directly the same answer as we had in method 1. The next step is to calculate the recoverable amount, which is the higher of the fair value cost to sell and the value in use. These figures were provided in the question, and the highest figure is 62,500 and therefore the recoverable amount. In this case, if we compare the RA and the carrying value is higher. 74,880 is higher than 62,500, and therefore our assets in our SFP is too high. It is therefore prudent to apply an impairment charge, which is the difference between those two figures, and therefore comes up to 12,380, which will be an expense in your profit and loss. Your SFP figure will then be the reduced amount, that is the recoverable amount of 62,500. I hope this tutorial helped you understand better what is impairment, and if you would like to have more videos like this, please don't hesitate to let me know in the comment section, and don't forget to hit the subscribe button, and I'll see you next time.